Good morning, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video. What am I looking at in the market after the FOMC? Well, why don't we look at the FOMC first of all and what the Fed has said and what is the influence of that on the stock market. So let's try to answer these questions and then we can move forward from that. First of all, as we said yesterday, the element of surprise wasn't going to be there with respect to the Federal Reserve's monetary policy decision. So that is exactly what we received. We received no change in interest rates, so they are still sitting at record low. And secondly, the asset purchase program didn't change as well. Now, what does that mean for a normal investor, for a trader? So that means that this stock market rally, which was primarily fueled by the help of the Federal Reserve, is still there. Then the question is, if the Federal Reserve support is still there, why are we seeing the stock market dipping to the downside? As you can see in the chart, the Dow Jones futures have crossed below an important moving average, and that is your 50-day simple moving average. Now, of course, this is not the first time this has happened, because the index has crossed this 50-day SMA over the last few days few times, and but the fact that the index is breaking below this moving average again, it is something that we should all take caution. Now, going back to the question that why the stock market is taking a leg lower, because the Federal Reserve struck a very cautionary note. They didn't sound too confident about the gradual recovery of the US economy. So what they said that yes, okay, we are happy that so far we have received a good economic recovery. The results are better than the anticipation, but this doesn't really mean that this economic recovery is going to shift to a bigger, higher gear. So the fact that the Fed isn't really that confident about the pace of this recovery is really influencing the stock market today. This is the reason that we are seeing retracement and a major sell-off, if we can say that, because the Dow Jones is down by well over 200 points, and I'm speaking of the futures. The S&P is down also nearly by 1%. As you can see in the chart, the S&P 500 futures have also crossed below that critical price level of 50-day simple moving average, and the situation is no different for the Nasdaq 100 futures as well. Now, this is a bit of an overreaction by the market? Does the market really need more time to digest this news? This is the question what traders are asking, and I say that yes, I think market is taking a little bit too much of that, because so far the economic recovery has been better than the anticipation. Now, given the fact that vaccine is likely to be here by the end of this year, that is only going to have positive influence on the economic recovery. The Fed cannot say that yes, okay, everything is hunky-dory, this pace of recovery is going to be too good. Because if they start saying that, imagine the second stimulus help, the second stimulus bill, which is still currently being in discussion between Democrats and Republicans, where that will go. If the Fed will show that, then we will not receive that. But overall, the conclusion, and in a very simple terms, is that the Fed is confident so far with respect to the economic recovery. That is positive for the stock market. But the reason that we're seeing retracement in the stock market today is the Fed isn't so positive for the future path of the economic recovery. And because of this, and despite the fact that the Fed is ready to keep the interest rate at record low level for another 3 years, traders are saying that the Fed isn't certain about this economic recovery. That is a caution for us, and hence they started to take this profit off this of the trade. And this is the reason that we're seeing that. But finally, where do we move from here with respect to the stock market? Well, the likely chances are that we can easily move, if we stay below this simple moving average, the 50-day moving average, we can move down towards 100-day moving average. That is where the critical support is for this particular stock market, and I'm speaking of the US Dow Jones Industrial Average and of course the S&P 500 futures as well. Now, as for the commodity market, and I'm speaking of precious metal gold, we've seen enormous amount of up and downside move, but the critical thing is that we are still above that 1900 mark. And that to me is a very positive thing, because yesterday during the statement, during the press conference, the move was no more than $20 to $25, and we are still pretty much trading well above that 1930 mark when it comes to gold prices. So this leaves, and more importantly, yesterday we touched that 1960 above, even above that price mark. So this leaves the room or the door open for the prices to continue their journey to the upside. That's all for today, and I'll see you guys next time.